All right, we want to take a look at some other names this morning. For more on that, we welcome in Jeff Pierce, Senior Manager, Derivatives Trading at Charles Schwab. So we were just talking about the EV space. We've got Rivian on your radar. Tell us what we're seeing there. It had some difficult numbers recently, right?
Yeah, absolutely. The numbers weren't good for the last report, and unfortunately, more analysts are weighing in. We've got Truist downgrading Rivian to hold from buy with a price target $11, down from 26. The analyst says they remain constructive on the value of the company's vertically integrated model and differentiated brand, but they see an imminent capital needs continuing to put a ceiling on the shares. They said Rivian is entering an extended plant shutdown period, which will drive flat year-over-year volumes. The firm also believes there's concrete evidence that they need to see concrete evidence of strength in those initial R2 orders in order to bring optimism back. As you pointed out, we recently saw them report revenue was up 98% year over year. They did beat slightly on that number. They reported a loss of about $1.36 a share, which did slightly beat estimates as well, or excuse me, missed estimates slightly. Production side, 17,541 vehicles. That was up 8% year over year. But if we look on the outlook side of it, they see production around 57,000 for 2024. That's really in line with what we saw in 2023 and well below a lot of the estimates we saw out there. We know the company has been focusing on cost cutting. We've seen layoffs. They recently announced a 10% reduction in their staff. They've been looking at some adjustments they can make in terms of cost efficiency on the vehicles and in their plant operations. And of course, they've got that R2, which the analyst mentioned, coming out. On March 7th, they revealed that midsize SUV is supposed to be a lower price point vehicle that's going to match up with that cost structure plan that they have. But those expectations are relatively high for that car. Yet this company's still struggling on the cash side of it, especially when you look at names like Tesla, which they're competing against.
Is there any expectation for more cutting from Rivian? I mean, I know we talk about this before. You can't really cut your way to growth. Or is really the general focus from what we're seeing in terms of analyst commentary on what could happen with this new vehicle?
Yeah, that's a good question. I mean, the cash part of it has really been a big issue for Rivian for quite some time, although they've continued to get better and better from an execution standpoint. They've continued to burn through less cash. They are really trying to ramp up production in the right way, and that does include cost cutting, right? And so a lot of that is going to be how they deal with how they produce the cars, some of the components we see and go in the vehicles. But does that completely rule out continuing to see more layoffs? I don't think it's out of the question. So there are some big question marks there, whether or not we'll continue to see those cuts. And yes, I think the R2, seeing what some of those numbers look like, especially on the orders, is going to mean a great deal for the company going through the rest of the year. But also, they're going to have to be able to compete in an economy that's a little bit tough for some of these vehicle makers right now, especially on the EV side.